Good morning everyone, and many thanks for joining us on Morning Markets from True Potential. Today we'll look back at asset markets from yesterday and also look at the UK employment data that has just come out this morning. Very much as we've been talking about over recent days, the direction of travel in asset markets seems to be one of volatility, very much driven by geopolitics and the news that we get from the Russia-Ukraine situation and how that feeds into different asset markets. And really, yesterday was very much about European equities, weaker on the day, very much driven by German equity markets there. And really, I think that's in response to the fact that Germany is very dependent on Russia for its gas and so for its energy market. And that's something that is very front and centre at this point in time. We also saw a little bit of disruption at a sector level as well, that coming through in the travel and leisure side of things. And in the UK, financials a bit weaker as we saw these changing shape of the yield curve with the 5-year yield falling below that of the 2-year. In other asset markets, we continue to see that volatility that we've been discussing in sovereign bond markets. In the US, the Treasury market, typically a safe haven in times of a little bit of market stress. We saw yields coming in at the start of the day, but then moving out closer to the 2% level over the course of the day. Very much driven by, I think, comments from a Fed governor who's quite anxious, I would say, on the inflation backdrop, continues to push for a 0.5% increase at the March meeting, which is a bit of an outlier, but he has been very vociferous on that over recent days, and that's certainly impacting the US Treasury market. Oil, again, continues to be behaving in a positive way, approaching close to $100 a barrel in Brent, very much just driven by that conflict or the potential for conflict between Russia and Ukraine and how that's impacting sentiment. Turning then to the UK this morning, we've continued to see the employment data as being a robust indicator of the UK economy, and indeed that is what we have today. The unemployment rate at 4.1%. falling about 0.2% quarter on quarter, but really a very consistent trend through the final quarter of last year. The one thing that we've touched on over recent weeks has been vacancies. Vacancies continue to increase. Vacancies at a record high, some 1.3 million. And just when you're reading through the ONS data this morning, the one thing that I took away from that is that the vacancy rate is now some 500,000 jobs higher than it was pre-COVID. So really indicating the challenge of getting labour into the UK market at this point in time. At a salary level, we saw pay growth of some 4.3%. Given the inflation backdrop that we've been talking about, that means that income has declined in real terms. So some of the real pressure points evident there, both in terms of wage, but also in terms of the ability to attract workers into the economy at this point in time. Markets overnight, marginally weaker in Asia. That's likely to feed through into Europe this morning. Looking to the day ahead, very much thinking about producer prices in the US, whether we'll see a bit of a slowdown from the 9.7 that we saw in December, and how that might feed into the consumer price index later in the week. I'll leave it there. Please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.